Hi, Tamal. Welcome to the Business Standard Banking Show. We're starting our discussion by talking about something you've delved into in great detail in your column. We are seeing a drop in bad loans in public sector banks. There's a rise in profits. And you are saying that the government should make hay while the sun shines. Why are you saying that, and how exactly do you mean?
Well, you know that if you see that I started my column saying that Bank of Baroda market cap crossed 1 trillion. So of course, it's only the second bank out of the 12 public sector banks. This is the second bank, and this is a State Bank of India is the first one, much bigger. So bank stocks are shining. There's a bull run. Indices of bank stocks have done better than Sensex have Nifty in the past 1 year or so. And even within the banks, public sector banks have done better than the private banks. So, I mean, it's the kind of bull run what we are seeing as far as the public sector bank stocks are concerned. It's something we have not seen before. So isn't that time the government take this opportunity and grab it with both hands and try to make some money? That's all I'm saying, because what happens is this. I don't want to burden you with numbers. Since the 90s, the trillions of rupees, your money, my money, taxpayers' money has got into the recapitalization of banks. But has the government made any money out of it? No. I mean, I spoke about one economic survey which spoke about, analyzed how much money has gone into the banking and public sector banks, and the return is actually negative. In the US, what will happen that scheme post Lehman crisis, that scheme, they put in money and they have made money, they have made profit. We have not done. So this is the time, probably, time is right. The government should go ahead and use this opportunity to make.
So are you suggesting that the government should basically sell in the market? How will that play out?
Exactly. I'm not talking about privatization. If you see, government stake is many of the banks 90%, some of them are 80% and on. So nowhere close to 51%. Let the government hold 51% plus. I'm not talking about at all this privatization is a separate issue altogether. But here you just use this opportunity to go to the market and sell all your stake. Sell your shares to others. Whatever money the government can make, I think this is an opportunity for the government to do that.
You're saying that you're not talking about privatization and the banks can still hold 51%. Government can still hold 51%. But let's talk about privatization. So what do you think has happened there? Because actually nothing has happened.
Yeah, it's more than 2 years now, the announcement done by the finance minister in the budget. But I think we are all waiting for, it's a test case which IDBI Bank, it's a genuine privatization, because when LIC picked up a stake, it's a proxy for government. Now IDBI, we discussed before, IDBI, now the technical bits are being evaluated. And I would like to believe by December, IDBI Bank will be closed, the privatization. And once that is done, and 2024, the elections are there. So whether the government will be encouraged immediately after the IDBI privatization to get into bank privatization, probably not, keeping in mind in the general elections. So probably we may see it post elections. One thing you did not ask me, but I'm just explaining that. Even though I'm not talking about privatization, what I'm saying is this: if you want to run the engine as well as it is running, government should follow a hands-off policy. At this point of time, being a dominant shareholder, government is also, the banks are subject to dual regulation, which is Reserve Bank of India and government. As early as in 1991, early 90s, the Simon Committee spoke about it. So government should actually let the banks run by their boards. And two critical factors which can be done to run the banks on their own is, let the board directors be appointed, not with the government interference, and let the compensation be decided by the board. These two things can change the profile of public sector banks, and for that you don't need any act amendment. For that, this so-called Bank Nationalization Act does not need to be amended. Just only one particular clause, which is Section 9 of that act. Just you amend that clause.
Let's move on to something that made a lot of news recently. and that was RBI talking about internationalization of rupee. Now, can you explain our viewers basically what it means and what do you think of it?
What it means, that rupee, all our trade happens through rupee. Right now, we essentially use dollar. Like the importers, they need to pay in dollars, or in some cases maybe yen or pound sterling or euro, but mostly in dollar. Even Reserve Bank of India's total forex reserve, you see it's a closely guarded secret. People don't talk about it, but the bulk of it is dollar. US Treasury bills. So that's a reserve currency. Now, what we want is this rupee being used for all these cross-border transactions. So it's good. It's definitely good, but it's a dream. When will you realize it? We do not know. How many decades it will take? We do not know. Because just one technical point I'm telling you: this report was submitted in October 2022 and released now. Why did Reserve Bank of India take so long to release the report? So definitely, even the regulator is not in a hurry. It's not a RBI report, it's a independent committee report, but it's released after 6 months, more than 6 months. So certainly there is no urgency on behalf of the central bank to do that. Even if you are looking for public comments, you should have done it in October itself. Why did you sit on it so long? And then, there are many issues. I don't want to get into the technicalities. Even in the government bond market, we are not in the global bond indices, and for foreign investors, they can't buy just any bond. There are restrictions. Yes, the restrictions are being waived for the new bonds, but the legacy bonds, they cannot touch it. RBI does intervention in the foreign exchange market. If the rupee goes, rupee is weakening, then RBI comes and sells dollars. If the rupee is strengthening, RBI comes and buys dollar. Now, if you want rupee to be internationalized as sort of reserve currency, can you afford to do that?
Point taken, Tamal. Turf is not right now. There are a lot of roadblocks, so this may not be the right time, but it is the right time, as you said, for government to encash in public sector banks. So hopefully there are people listening to you and will take some action. We will see you again next week. Thank you so much for joining us today.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.